Hi, it's me. It's finally done. The banks have been lying to us about our money for years, and in today's video, we're going to expose all of their secrets that they do want you to know about your money. The first secret is they make most of their money from holding on to your money. The banks are in the business of making money from us, and when you put your money into the bank, they lend it out to other people and charge them interest. So, the more money you keep in the bank, the more money they make. Now, this isn't necessarily a bad thing. In fact, it's actually quite brilliant, because it means we can all benefit from having a banking system where we can safely store our money and then the banks can lend it out and make money from it. But the problem arises when people start leaving their money in the bank for no reason. For example, you might have a savings account with £10,000 in it, but only use it occasionally for emergencies. Or perhaps you have a current account that has £3,000 in it every month, but you never actually physically see the money or move it around. In these cases, you're effectively just leaving your money sitting in the bank for them to profit from. The solution is simple. If you're not using your money, then move it into an account that doesn't pay interest. For example, if you never need to access your emergency fund, then put it into a cash ISA or a fixed-term deposit account. That way, at least you're not giving the bank free money. The second secret is they can take your money whenever they want. When you put your money into the bank, you essentially enter into a contract with them. This contract states that they can take your money whenever they want, but thankfully, this doesn't normally happen unless you do something really stupid, like commit fraud or something. However, there have been many cases in recent years where banks have taken customers' money without even telling them. For example, in 2013, Lloyds Banking Group was fined £20 million by the FCA for taking money from its customers' accounts without their permission. They were doing this to cover their own overdraft fees, which was completely unacceptable. Another example is when a bank accidentally took £76 million from one of their customers' accounts. They tried to hide this for over 2 years until the customer noticed and demanded his money back. These examples may seem extreme, but they're not unheard of, and it's important to be aware of your rights as a customer, so you don't fall victim to something like this happening to you. The key is to read the terms and conditions of your account carefully, and make sure you understand what they're getting into before opening any account. The third secret is they'll charge you fees for everything. Most banks are very sneaky when it comes to charging us fees, because they know that if we actually read through the terms and conditions, we would probably just go to another bank instead. For example, if you have an overdraft, they will charge you an overdraft fee. Even though it may seem like common sense, it's worth pointing out that if you spend more money than you have, you will get charged a fee. But here's where it gets tricky. Some banks offer an arranged overdraft facility, where they allow you to go into an agreed amount of overdraft without charging you any interest or fees. However, if you go over the arranged overdraft limit, then you'll start getting charged high interest rates and fees. That's why it's important to only use an overdraft as a last resort when you absolutely need it. Also, be careful with current accounts that offer an overdraft as a feature. While this may seem convenient, it's important to remember that they can charge you high interest rates on the overdraft. So use it sparingly and only for emergencies. Checking and switching accounts regularly can help you avoid these sneaky fees and charges. Many banks offer basic bank accounts that are free to use and don't come with any hidden charges. The fourth secret is that you can't trust them to keep your money safe. Banks are designed to be trusted institutions where we can safely store our money. However, in recent years, we've seen a number of high-profile cases of banks being hacked or making mistakes that resulted in customers losing their money. In 2016, for example, a major UK bank was hacked and thousands of pounds were stolen from their customers' accounts. Similarly, in 2019, a US bank accidentally sent $100 million to the wrong account due to a staff error. These cases highlight the importance of taking steps to protect your money and not relying solely on the bank to keep it safe. For example, you should consider using two-factor authentication on your accounts and keeping a close eye on your transactions. Additionally, you may want to explore options like keeping some of your money in a safe deposit box or using a hardware wallet for crypto. While these measures may seem extreme, they could be necessary to safeguard your financial future. So don't put all your trust in the banks and take proactive steps to protect your money. The fifth secret is that they don't care about you. The truth is that banks don't really care about us as individuals. To them, we're just numbers on a screen. The banks want to make money by lending out our deposits and charging interest, so they don't really care whether we're happy or not. This can be a bit disheartening, but it's important to remember that we do have some control over the situation. We can choose to switch banks or use alternative financial services like credit unions. We can also push for more regulation of the banking industry so that they reforce to treat us better. Ultimately, while the banks may not care about us individually, we do have the power to make change on a larger scale. The sixth secret is that they encourage us to borrow money. Banks exist to make money by lending out our deposits to other people, so it makes sense that they would want to encourage us to borrow money. When we take out a loan or a mortgage, the bank knows that we're likely to default on the loan and they can repossess our house or car. This means that they're able to make money by charging us interest on the loan, while also knowing that they're unlikely to lose out in the long run. However, this isn't always a bad thing. Borrowing money can be a good thing if we use it to invest in things that will make us more money. For example, taking out a mortgage to buy a rental property can be a great way to generate passive income. The key is to make sure that we're only borrowing money for things that will make us more money in the long run. The seventh secret is that they don't want you to know how much money you have. When you put your money into the bank, they want to make it difficult for you to know how much money you actually have. This is because they want you to think that you have less money than you actually do. That way, you're more likely to leave your money in the bank, and they can make more money from it. For example, let's say you have £10,000 in the bank. The eighth secret is that they make money from selling our data. The banks have a lot of personal information about us, such as our income, spending habits, and credit history. They use this information to make decisions about whether or not to lend us money and also to set the interest rate that we pay on loans and mortgages. But they also make money from selling our data to other companies. For example, if you apply for a loan with one bank, they may share your details with other banks and financial institutions, so that they can offer you products that they think you might be interested in. While this may seem convenient for the bank, it's important to be aware of this practice and take steps to protect your privacy. One way to do this is by reading the terms and conditions of your account carefully and understanding how your data is being used. You can also contact the bank directly and ask them to stop sharing your data with third parties. By taking these steps, you can help ensure that your personal information remains private and secure. The ninth secret is they're too big to fail. Banks are deemed too big to fail, meaning that if they were to collapse, the government would step in and bail them out. This is because if a major bank were to fail, it could cause chaos in the economy and lead to a financial crisis. While this may seem like a safety net for us as customers, it's important to remember that the banks are businesses and should be treated as such. We shouldn't assume that they're too big to fail and need to be held accountable for their actions, just like any other business. One way to do this is by supporting legislation that promotes competition in the banking industry and prevents any single bank from becoming too big to fail. We should also be aware of the risks of putting our money into a single bank and consider diversifying our accounts across different institutions. By taking these steps, we can help ensure that the banks remain accountable and that we do unface the consequences of their risky behavior. The 10th and final secret is that they can control the economy. Banks have a lot of power over the economy, and they use this power to benefit themselves at our expense. For example, when the government lowers interest rates, banks use this opportunity to charge us higher interest rates on our loans and mortgages. Similarly, when the government increases interest rates, banks often don't pass on the full amount to us, meaning that we get less interest on our savings accounts. This practice allows banks to increase their profits without having to work harder or take on more risk. As a result, they're able to pay higher dividends to shareholders and bonuses to employees, while we, the customers, end up paying the price. To combat this, we need to be aware of the ways in which banks manipulate interest rates and take steps to protect ourselves against their tactics. We can also support measures that promote transparency in the banking industry and prevent them from using their power to exploit us. So there you have it, the 10 secrets the banks don't want you to know about your money. It is important to be aware of the ways in which banks make money from us and the tactics they use to maximize their profits. By understanding how banks work and the secrets they hold, we can take steps to protect ourselves and our money. We can also support measures that promote transparency and accountability in the banking industry, so that they reinforce to treat us fairly. So do you agree with the points I made in this video? Let me know in the comments below. If you enjoyed this video, please give it a thumbs up and share it with your friends and family. Don't forget to subscribe so you never miss out on my latest videos. Thanks for watching, and I'll see you in the next one.